So that's really how to do it. Keep it simple. Um, we have it narrowed down to 5 stocks because I have changed the percent change to 50% and above. And that's what you're looking for. You're looking for the large percent gainers. So you're looking for big percent gainers. We have a price range of say $2 to $15. And in that price range, the stocks, the volatility is at its greatest, and the lower the price, the greater the volatility. Um, Usually below $2 and stuff, you can still trade, but it's very precarious in terms of risk management, and it's very easy for people to misjudge the capacity for themselves to lose a lot of money quickly. If it gets a little bit higher price, at least it's still dangerous territory. There's no doubt about it. The lower price stocks are extremely volatile, and it's dangerous territory for trading. As you will see by some of the examples I show you, you just think about how they can change from over the space of a few hours in a trading session. The price can change dramatically, but you can get there with practice, and if you have specific setups that you just zone in on and that you kind of almost refuse to trade until you have your setup appearing, then you can do very well. So we looked at PHAT, which had that news on it was a pharmaceutical company and the FDA approval. Just a point on that, there are 3 stages of FDA approval, so you would need to read into that to see. Sometimes the news headline can be very exciting, but you just need to be very careful, because just because it's a very exciting news story, they can gap up and then they could be gapping down the next day, and you could be down in your money. So that's just a word of caution on that. EYEN is the second one here. So let's just take a look at that one. So EYEN has already been running. So on this day here, a few weeks ago, on the 20th of May, it would have shown up on a screener. And you can see what you should do is take a note, to have a notebook or a diary or whatever, where you jot down the screeners, the results of your screeners, and then you keep them on watch then for future. So like then you can keep that on watch. You can say the top on the day was 170, 178, and you can put an alert on your platform where it'll be like create alert, and so you can you don't have to be watching it all the time, but if you have your platform open, and then you can say, okay, I want to know if that stock goes above 180. And so the second day, on the Wednesday the 21st, it's coming down, so you may have forgotten about it, and it's just not relevant if your strategy is to buy, say, and go along. But you want to know if it's approaching that area again, so you could maybe set it a little bit below, maybe at 170 to 175 area, and say, oh wow, it's getting close to breaking out the highs of the first day. So that's how you kind of keep track of things. You keep a notebook, you jot down what's gapped on the volume, and then day two, it's pulling back. So sometimes they just pull back and they don't ever come back, but this one did come back, and then it did pull back again, but it started to bob about and kind of come up here again and test this high here of 210. And so then you can be thinking, okay, there's a multi-day breakout strategy here, and it's a breakout over multiple days, in terms of it's been in play, so to speak, for multiple days. It hasn't gone away, it hasn't just faded away. It's perked up here, and it's now it closed pretty much at a breakout point, and then the following day it probably tries to break out, but it doesn't quite have it, and there's a low volume on that day. But then the next day it goes, and it goes into what we call a supernova move or a parabolic move. So if we look at, actually this came on my radar yesterday, and I traded it to the short side because of the gap up. So it had put in this parabolic supernova move, and then yesterday it was gapping up, so you can see that here. So this is corresponds to, see, that's just highlighted this day. That is Tuesday the 5th of June. It went into a big move, so it just ran from the open. So it's going from 2s up to 3s, so that's 50% move plus in the space of a few minutes. And then it kind of trends near those highs for the remainder of the session with a tight range, so it can be positive when it does that it still has more juice in it. And after hours then it surges up here after hours on pretty low volume. So coming into the next day, I could see that this stock was gapping up significantly. It was up at 432 from a prior close of 314. So that's a big gap up. You can see the gap on the chart from the close to the next day's open. So in that case, usually I feel, just from one of my short seller strategies, I would call it overextended gap up play. Got involved maybe a bit late here, but it probably tried to continue here, and it's a large volume, and it just this candle, 5-minute candle, closes red, which suggested to me that it was probably heavy, is the word we'd use, is that it probably has some room to come down. So I got short in here, and I started to cover down here. So I cover in pieces down here, and the last cover was here. So it did form kind of some tightening candles here, and it had a 5-minute green candle on. The volume started to pick up again after dying off, and it's around the 10:30 a.m. time frame, which is often a perfect time frame for going long and buying for kind of a reversal move of some sort. But I didn't go long anyway yesterday, but you can see what happened later in the session. So I feel like there is a couple of really good opportunities. Let's just point them out. Here, around that area, and another one probably around here. So you're looking for the price to calm down. As I said in the opening minutes, it's crazy, but then the price action can calm down, and you're waiting for that. So you can see it's set a low here in the morning of here, and you're looking to see, okay, well, maybe because of the fact that the volume is drying up here, everybody who's long the stock is happy enough, they're not selling it anymore. So it starts to perk up and pull back, and then it forms this kind of higher low here. So it's just an example of setups that you can look for on these moving stocks. Even if it's up a lot, you can still go long. It's just that you have to be nimble when you're trading these stocks, because you can see the range and the variation of the price from the opening to the close. What happened in between is very, very dramatic. So need to be well trained up and well practiced to be able to trade these safely.